Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso, and today we're going to talk about a new practice aid from the AICPA specifically for virtual currency and other digital assets. As you're probably aware, cryptocurrency, blockchain becoming really more of a day-to-day activity. What used to seem so far off and so distant and sort of a concept has really become more of a day-to-day use. And as it grows, there's been questions about, well, how do I account for this? And how do I audit this? And what are the risks that we need to consider as part of this process? And so the AICPA created a working group, and the working group put together in a practice aid for accounting and auditing of digital assets. The accounting came out in December of 2019. The auditing came out in July of 2020. Now it is non-authoritative, so it's not the end-all be-all in terms of the ASB blessing this. However, if you look at the list of people who participated, you'll notice some of those AICPA staff are very integral to the ASB process, and the members of the Digital Asset Working Group were pretty amazing people. So if you have nowhere to start, this is definitely a good starting point for what you would want to consider. We're going to talk high level. We're not going to get into all the details today, just some of the issues that they address and some of the considerations you might want to be thinking about in your firm and your application. So in terms of accounting, for those of you who are, potentially involved in cryptocurrency, a lot of questions are about, well, what is the proper accounting? FASB has not issued a standard on digital currency or cryptocurrency. As a result, there has been a little bit of debate about what is the appropriate treatment. We think it's likely an intangible asset. It really can't be currency because there's no government that underlies it, right? So there isn't a sovereign nation who is sort of supporting it. So that kind of rules out currency. It doesn't meet the definition of a financial instrument because it's not cash, it's not currency, it's not an equity security, and it doesn't guarantee a transaction that's going to result in cash. And so as a result, it doesn't meet any of the requirements to be a financial asset. And because it's not tangible, right? You can't touch cryptocurrency, it's crypto. It can't be inventory because inventory is a tangible asset. So basically, by deduction, we're going to end up treating it like an intangible as the basis that they're coming up with from the working group. Now, the question is, well, what happens when we use it as a form of payment, right? So we pay out of our cryptocurrency. What do we do in a 606 transaction in our new revenue recognition world? Well, because it's not currency, it is a non-cash transaction. And just like anything else that's a non-cash transaction under 606, it is going to be measured at fair value. Now, we put this cryptocurrency on the books. How are we going to treat it after the fact, right? So subsequent measurement. And again, while it is an intangible, it's an indefinite lived intangible. It doesn't have a finite life, right? It doesn't have an infinite life. It just has an indefinite life, right? We just don't know how long it's going to be. So it would not be appropriate to amortize it, right? It doesn't, lose value systematically over that period of time. So instead, we're going to have impairment testing related to how we handle other assets that have an indefinite life. What happens if we sell a digital asset, right? So in this scenario, it really depends on who we are selling it to. If it meets the definition of a customer, we would follow topic 606. So if this is an exchange in the ordinary course of business, then we would follow topic 606. If we don't meet the definition of a customer, it's not an ordinary activity of the entity, then we would follow topic 610. Other things that came up when we have an entity who's the depositor, it's holding it in a third-party wallet, right? So now we get into some of the more complicated areas here. Who recognizes the digital asset on the financial statements, right? The depositor or the custodian, right? So when I put a item in the bank, right, it's still my cash. The question here is when I have a custodian, the question is really based on who has control. And so they kind of talk about what does it mean to control and then who should be recognizing it on their financial statements. So those are some of the accounting issues. They do address some more, but those are the key accounting issues that they're going to address that are most commonly questioned. They also addressed auditing. So for those firms who have clients who have these intangibles, assets on their books. The question is, well, how do I audit this, right? There's not a free market concept going on necessarily right now. It's not as, it's not as easy to audit as, say, an investment in a share of Apple stock. And so the question here is, well, what are we going to do? And they basically say, this is a pretty risky area when you're dealing with this new ecosystem, as they describe it. And so you have to be thoughtful. The first one is, are you up for this, right? What's the auditor skill set? Are you capable, right? So that if you go back to the quality control standards, you should only take on any engagement that you are capable of doing and you have the competency. So you have to think about that. Also think about your QC process. What are you going to have to do in terms of acceptance? Who is able to concur on these types of items? So you might need to update your QC process if you should accept a client who has these cryptocurrencies. You might need to think about training, right? Competencies of the staff and the partners who are going to work on these types of engagements. Thinking about whether you want to take them on at all in terms of your client acceptance process. And then obviously risk assessment, because these are different risks than we're used to. So when we get into these, we're going to actually walk through, and I'm not going to read you all these slides because that would not be efficient. I just want you to be aware of some of the questions that the AICPA is raising before you start auditing these, right? So before you say yes to a client that has them, what are some things that you need to consider? And first one being the auditor skill set, right? So in there, what are the types of clients you're capable of accepting? Is it blockchain? Is it digital currencies, only certain digital currencies? Determine whether firm-wide or firm-wide areas of focus or criteria for client acceptance within this area of digital assets, right? There's a lot that goes in here. So what are you willing to accept? Within that, make sure people are aware of the risk factors of these digital systems so that we understand if the client is an existing client and takes, and purchases this, what does that do to the risk assessment? And then communicate, right? Make sure that we're communicating our consultation requirements if we have cryptocurrency, our training requirements if we're going to be auditing this, so that firm personnel are prepared. We also have to identify individuals who are qualified to do this, whether they're internal or external, whether they are auditors or specialists who have the competence in auditing these types of items, right, that have gone through this, and make everyone aware of who these SMEs are so they know to reach out to these people. We also want to require the SME involvement in client acceptance and continuance. So if we do have either a new client who has cryptocurrency or an existing client and we're going through our continuance process, that they make sure that they're reviewing it to make sure they're comfortable with the types of assets that are being acquired. We obviously want training as part of this. If you're going to get into this, there are unique issues and risks that we have to make sure that we're doing that risk-based approach. And then if we need a specialist, that we have the right protocols for ensuring that the specialist is obviously prepared to handle this. So as a result, you're likely going to have to update your QC system, right? Implement an authorized list of engagement partners who are allowed to approve these, what roles people can have. Obviously have practice aids, tools, training, work programs to make sure that they're auditing these appropriately. Establish consultation requirements for the unique accounting and auditing issues. Updating the criteria for what you are willing to do in terms of an EQCR, or what kind of technical competence and qualifications are going to be needed for these approved reviewers. And then potentially you might have new or high risk engagements in terms of the pre or post issuance process as well. Not only do we have to worry about the auditor, we also need to worry about the auditee, management skills and competencies. Obviously, we talked about how the accounting is not as clear cut here. There's nothing authoritative. So obviously management needs to have the skills and competencies to maintain their books and records, as well as obviously monitor their assets. So does management have the experience in digital assets? Do they understand the regulatory environment? Do they maintain the books appropriately? Do they make sure that they understand what they're entering into? Do they have appropriate specialists or accounting consultants that they're using as part of this process? And do they understand how the financial reporting framework applies to these types? So some of the challenges here, right? We have a lot of issues. This is a pretty anonymous process. And so there's an opportunity for illegal activities, money laundering. So that heightens our fraud risk, obviously. And this concept of anonymity, right, makes it hard to identify these entities. So that increases our risk assessment across the board. Then we have to think about management's integrity and strategy. Why are they entering into this? Is it for an invalid purpose? So we need to understand its business purpose. We need to understand the nature of the assets. We need to understand their policies and procedures. We need to think about how they're going to monitor for illegal or suspicious activity. We need to talk to them about their understanding of the legal and regulatory frameworks. Obviously, we have the Bank Secrecy Act, we have the AML law. All of these things have to be taken into consideration. AUC 250, laws and regulations that are material to the financial statement. So we do need to understand this. And then inquire to understand what their due diligence is going to be. There's also a huge focus on processes and controls, including IT, right? So what kind of technology are they using? How are they tracking the information and reconciling it? The methods and controls to actually secure it. And then their controls to establish, identify, and authorize these transactions. So we're going to need to inquire with management, specifically those in the IT department, about the nature of the IT controls, the application controls, the processes to track, aggregate, and reconcile these digital assets. We're going to have to evaluate the competence of the entity's personnel, understand if they're using an IT specialist in this area, and get the service organization SOC reports. We should also inquire with management about their understanding of their due diligence process for these third-party custodians, as well as their due diligence for new digital assets as they come out. Again, this is an area that's constantly evolving and brings obviously new risks along with it. And then how are they protecting these private keys and other customer information? Obviously, you have to have the infrastructure to generate and store these private keys. How are they stored? Is it going to be in a hot wallet or a cold wallet, right? We can get into all this IT terminology. And then ultimately understand the process for identifying, accounting, and disclosing if there are any related party transactions, as well as cybercrime or fidelity insurance in this area, and then the wallet storage, software, and backup. So a lot of things that we need to consider. So that was a pretty high level detail. I would definitely recommend that you take a look at it. It's well written, it's organized, and it definitely will help improve people's understanding of the risks related to digital currency, but also make it easier to say yes, right? So if you have the considerations and you can get the education, we see more and more educational opportunities out there. Let's get our people ramped up and ready to go. It's becoming a part of our normal day-to-day. Thank you guys so much for joining me on the Genuine Learning blog, and I hope to see you on a future blog. Have a great day, guys. Bye-bye.